All right. So today is about market structure. In the last call, we discussed the basic market structure, and I don't want to go back to that. Let's just move forward here. So the first thing you want to look out for is the swing structure. Okay, so we have three types of market structure. Number one is the swing structure. Swing structure. Number two is swing. The most important one is actually the swing, right? But we have three types, which is number one, swing. We have two others, man. I've forgotten. Who can help me out? Substructure. Substructure. And the minor structure. Thank you, guys. Structure, yeah. The most important one actually is the swing structure, yeah. And let's move on with the swing structure. I like to give pretty rare example. I don't like these names and all that or explanations. I'll just give you guys Victoria explanations so you that one you'll be able to grasp it faster. So let's move on here. So swing structure, basically, it helps you determine the current trend of the market, just like as I explained the basic structure during the last call. Yeah, when I said it helps you, determine when price is bullish or bearish and when to actually trade for. So swing structure gives you more like a focus here, a zone to focus on, a zone where to expect to buy, right, and then also. So let's during the last call as well, I explained we have two types of trend, which is the bearish or the bullish. So we're gonna start with the bullish structure here, the bullish swing structure. So yeah, we have this, and then we have this break. It's when price takes out the previous higher high. It's called the break of structure, right? And this is the structure. This low to this high, that is your swing structure. That means you basically expect price to come back into this zone, then you buy, right? You see price creates another swing structure. That means you're now focusing on this low again, this new low to this high. Then you wait for price to come back into this zone, then you buy. So basically, the swing structure just gives you a focus here. It tells you that, okay, this is the zone where you should focus on. So that means you would ignore whatever is beneath this low here. And based on the basic market structure, we all know this is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? So that means that you would ignore whatever is below the previous higher low. You focus on this current swing. The current swing is what you want to focus on. Then you expect price to come back into this zone. Then you look for your buys or you buy immediately. I hope you are getting it. Right? So that is that for swing structure. Now, what is the substructure? Basically, it's just a reversal. Now, in a bullish trend like this, because we all know that this is actually a bullish structure, right? So that means we are looking for buys, only buys here. So in a bullish trend, we all know that as well. This is now what a swing structure, right? Which means this low is higher low. That means we want to focus on this swing structure here, right? That means we expect price to come back into the zone so we can buy. But before price comes back into the zone, there is something that happens here. Price moves like this. So this reversal that happens is called the substructure. the reversal that happens is called the substructure. Now the main move is now called the minor structure, and the main move is the buys that you want to catch in a bullish structure. The main move is the buys that you want to catch here. I hope you're getting it. This is a sub and this is the minor. And for now, I want you guys to just ignore the sub and minor structure. Just focus solely on this swing structure, like it's the most important thing here. If you remember, I had a trade on, I had a setup basically on GBP USD. Let me show you guys a pictorial example here. So you can see price broke this structure. Price broke this high here. It's called a break of structure. That means this is now the low, the higher low, yes. And this is a previous higher high. That means I expect price to come back into this zone so I can buy. That is structure for you. You can see how I actually want to catch sell into the zone. So everything happening here, you see this reversal is called the substructure. The main move is called the minor structure. You can see how I'm patiently waiting for price to come back into this zone so I can buy. That is structure, right? Because I'll be able to understand that, okay, I'm focusing on just this zone here. Using my Fibonacci tool, I'm focusing on from this low to this high, where the reversal started from. That means I'm focusing on just this zone. So whatever is beneath it, let's see, on the 4-hour time frame, we can see we have other structures beneath it. I actually don't want to care about it, right? This is the main structure I'm focusing on. Every other thing outside this swing structure is not my business. I'm focusing on this zone here so I can trade from it. I hope you guys are getting it. So it's that simple here when it comes to this swing structure, and it's like the most important thing. You see, the substructure and the structure are not really important, but you're able to, it just helps you understand that, okay, this is what is happening here. Currently, you can see this is what is happening. Prices, reversing, coming back into this structure, into this zone here. That means that it's a substructure that is happening, and then you're expecting a minor structure. So the minor structure is what you want to wait for to be able to catch. We have the same thing on AUD USD as well. I think I have my entry seated there on AUD USD, using the same thing here. So I was able to understand structure. And if you even look at this trade here, this DXY, I think I analyzed it a few weeks ago before it happened. Why did I mark out this high? It's pretty simple. This is the structure here. Right? This is structure. Price broke this low. Price broke this low here. And you see how price came back to the zone, which is the zone here, and sold off. So basically, this is all that happened. The price came back here and sold off. So every other thing that happened in between are just minor structure, substructures here. They're like not really important until price comes back into the zone. Anyway, I'll go further into that. But in the meantime, we have something like that on AUD USD. Now you see I have a trade entry here on AUD USD. Why? Because you can see I marked out this I as my break of structure. Because it's actually obvious if you use our charts, line charts here, you'll be able to see that this is the previous higher high here. Every other thing here is just noise. This is the main higher high. So what do we have here? We have price do something like this and this. So what do you want to do? So everything that is happening here, you see all these rejections, all this are just substructure for price to come back into our main entry here, and then boom. Are you guys getting it? Cool. I believe you are getting it now. So it's that simple. That is all about the swing structure. However, there is something that validates the swing structure, right? Which is what I want to discuss now. Now, to validate your swing structure, there must be a sweep of the previous low. Please take note of this here. There must be a sweep of the previous low or the previous high. For example, you have price do something like this, right? Now, you already assume that this is a swing structure and you do not expect this low to be taken out. However, this is just a typical example, but it doesn't, in real life, it doesn't work like this, right? This is what we were taught when it comes to basic market structure, that price, you don't expect this higher low to be taken out and then this will just happen. However, in reality, this happens instead. Price tends to take out this low first. You see this low first? Then we now have this. Please pay close attention to this. So that means that before you mark out a swing structure, price must first take out the previous low, then break structure. Then you can now say, I have a sweep of the previous low, then a break of structure. Then you now expect this low to be protected, right? And this one will be the target. Then this is your swing structure. That means you want to focus on this zone here. This is your swing structure. Then what will price do? Price will reverse, come back into the zone, then boom. Now for sell entries, it's the same thing. The basic market structure tells us to, whenever we see something like this, whenever we see a break of structure like this, whenever we see a break of structure, it tells us to sell from this zone, right? That means that this high is expected to be protected, right? And the same thing keeps happening. However, in reality, this is what truly happens. Price tends to take out this previous high first, then break structure. Then it sweeps the previous high, then it breaks structure. Only then is this high expected to be protected here. Then we can have a sweet substructure and a minor structure. I hope we are getting it. I really hope we are. I hope we're getting it. So that is that. To determine your swing structure here, you need to see a sweep of the previous low or the previous high. That aside, now to know which zone to actually trade off from, when you get your swing structure, which particular zone do you want to trade off for? That is where the Fibonacci tool comes in. That is where premium, discount, and equilibrium comes in. Because it is very, very difficult. Let's assume you have a swing structure like this. You have this break, and then this low is expected to be protected here. So this is a swing structure. So how do you know where to actually buy from? This is obviously a bullish structure here. So how do you know where to buy from? What if price comes here? Do you just buy? How do you know which zone to actually buy from? Right. So this is it. It's very simple. Use your Fibonacci tool. I use my Fibonacci tool in two ways here. Please take note of this. First is to put your Fibonacci tool at the higher low, from the higher low to the higher high, to the current higher high. Then this middle is below here is a discount zone. where you want to look for only buys. Immediately price comes into the discount, you stop looking for sales. And this is the premium zone where you look for sales. That means sales to come into the discount in a bullish movement. Mind you, don't always have to look for sales. You can always just wait for for price to come to the discount zone so you can trade. And this is the equilibrium where you don't have to do anything. You just wait for price to come into the discount. But if you are impatient and you just want to trade, you can sell from here. But immediately price gets into the equilibrium, you stop looking for sell opportunities. Immediately price gets into the discount zone, you start looking for buy opportunities. Buy opportunities, you look for sell opportunities here. The premium, immediately price taps into this discount zone, start looking for buy opportunities to buy. I hope you are getting it. Yeah, that is the first way I use equilibrium, the Fibonacci tool. Now, to get an accurate entry here, you see the points of the break, that break of structure, you put your Fibonacci tool from the break of structure down to the higher low. Now, whatever happens here, I don't want to trade it. It's liquidity to me. This is where my entry will be. Whatever happens here, in case price comes here and goes above, I don't care. To me, it is liquidity. This is only the zone where I want to take my trade from. Don't worry, it is recorded. You can always go back to it. But I want you to pay close attention while we are doing this right now. So the two ways I actually use Fibonacci tool. First is to determine the discount and premium zone for the full swing structure. Then the second is to get accurate entry. That is, I don't want to trade where price is creating liquidity. I want to avoid liquidity. I want to trade after liquidity. It's very simple. The first one is this. A sweep of the previous low. It's very important. Then a break of structure. So this is, you have this and you have this break of structure. That means you will expect this low to be protected, right? Then you take your Fibonacci tool, do like this. That means this is the premium zone. You don't want to have anything to do here. You don't want to do anything here. You can either decide to wait for price to come down to the discounts. You buy at discounts here and you sell at premium. So you can wait for price to come down to the discount before you look for buys, or you look for sell opportunities into this discount zone. This is the first way I use my Fibonacci tool. Then after you're able to discover this, okay, you know that price is currently at the premium zone, you either wait, price comes to discount, and you look for price. Then when price now comes into the discount zone, right, what do you now do again? Sweep, break. You have a sweep, you have a break. This low should be protected. Now, when price now comes into this discount zone, you mark out your Fibonacci tool again. So price might decide to come here and do some things, move up. You don't want to be freaked. This is where your entry is. This is where your entry will be. This is where your entry is. Whatever happens here is none of your business. So let me use the Fibonacci tool within this zone again. From this high that was taken out, the break of structure, to the higher low. Let me delete this one. All right. So from this break of structure to the higher low. Now, whatever happens within this zone is none of your business. This is where your entry will be. So that means that you get your swing structure, then you get to know if price is currently at the discount zone or the premium zone. It happens for buys or sells models here. buy or sell model. Now let's see. Let's look for examples here. Chart example. Let's go for chart example. On GBP USD, I took a trade last week. Which is this full buy here. So let's look at the reason why I took that trade. Let's cut price back. All right. So we can see, first thing you want to look out for a swing structure, yeah? You always want to look out for a sweep, right, of the previous low. That's for a buy. In a buy swing, yeah? That's in a bullish trend. A sweep of the previous low, then a break of structure, right? Now, I'm focusing on this low to this high. Now, here, I know that this is the premium zone and this is discount zone. That means I want to focus on the discount zone, yeah? I want to focus on the discount zone. But to focus on the discount zone, I need a precise zone where I want to trade off from, right? I need a precise zone so that then I now bring my Fibonacci down again to where the break of structure occurred. Then I know that, okay, whatever happens within here is none of my business here. I want to focus on whatever happens here. You see, below this thing, even if I decide to just place my entry right here and cover this low, I will still make money, right? Compared to just putting my entry at, look at this. So now I'm able to understand that, okay, price will always come below. Whatever happens before this low here is liquidity, right? To make this zone valid. And let's see, even if I don't actually trade like this, this is just an example here. Just an example. So let's see. You can see you're already in profit. Price might have probably come back or whatever, or at least you're already in the trade. And that's it. Even the basic knowledge will make you money, right? Even the basic knowledge will make you money. I've explained about 4 things now that I want you guys to go home with. This session is recorded. And I don't think I've explained structure like this ever. This is the first time I'm explaining it like this. I will do the recorded session. We're actually done. I told you guys it's all going to be for about 30 minutes. So I'll stop recording now. I told you guys it's just going to be about 30 minutes. And that's it.